Welcome, 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 welcome. Let's get everyone in the room. I will share my screen. Okay, so I'm excited tonight to be presenting a new deal. And this is a Germany deal. It's an income producing deal, and it's in the sector of mixed use. If you've got any questions, put them in the chat box. Always good to know where people are coming from, what your thoughts are. Now, one of the things that's really important, and I want to go here straight away, if I go into wealthmigrate.com, all the information that I'm going to share with you is available on a platform. Now, just imagine that you had a platform where everything was in one place. And the beauty is you don't need to imagine, because you can literally go here, you go to wealthmigrate.com, you go to this Encore Germany deal, and everything is here. So all the videos about the areas, even the video, I'm going to talk to more of this in terms of the partner on the ground, Peter Katz, but everything you want to know, documentation, everything, it is all here in terms of that process. So my purpose tonight is to try to be condensed. If you go back to that presentation there, and if you want to understand the thesis of why Germany and why mixed use property and who Peter Katz is and who Encore is and all that depth, you can literally go and watch this YouTube video. And it's nearly 2 hours long. So there's a tremendous amount of material that is already there. You can also go along and you can read the investment fact sheet. And again, this is what, 18 pages long. And you can go through all the information. It's there already. My idea tonight is to be concise and to pick out the most important things that I think you need to know. So just quickly, I'm not giving you financial advice. I've been investing internationally for 28 years. And what I'm going to do is conceptualize and contextualize what I think is important. So when you're looking to diversify, the first thing is that you want to diversify across countries, currencies, assets, partners, and time. And what I find really interesting is that James Painter is someone that I've followed for many, many years. And again, if you've read my book, he actually wrote chapter 2 of my book, Property Going Global, all about currency. And he's someone that I highly respect. And he's been talking about how the euro is going to increase in value against the US dollar. He's been talking about that for a number of years now. Garth Wallman, our partner at the family office, equally says exactly the same thing. And so this is the whole purpose of wanting to diversify across countries, currencies, assets, partners, and time. And so the question is Europe and Germany. Why do you want to invest in Europe and Germany? Where, what, how, and with who? And as you know, I've just spoken to it. I literally wrote this book. It was endorsed by Clem Sunter back in 2013. And the whole idea behind it was most people get caught up as investors investing in one area, in one country or one asset class or one currency. And I fundamentally believe that there's no one right asset class. There's no one right investment. There's no one right partner. You've got to diversify. But to do that, you've got to have a system. And so I first created that book. And as I say, it was endorsed by Clem Sunter. And then we evolved that into GIDS, the Global Investment Due Diligence System. And if you look at this, it starts at a macro level. Like, what countries do you want to invest in? Then it goes into currencies. What currencies do you want to invest in? Then it goes into sectors. What asset sectors do you want to go into? And then we go into partners and actually looking for partners that come with substance. Once we go into partners, then we go to cities. And only once we go on partners in cities and sectors do we actually go to the deals. Most people do it the wrong way around. They're literally out there and they're looking at a deal and they're doing a due diligence on the deal. It doesn't work like that. What is critically and materially important is that you go out and you do a due diligence on the partner and the caliber of the partner. And only then do you start looking at the caliber of the deal. And that's already assuming that you've done the macro analysis on the right country, the right currency, the right asset class, and even the right cities. So I want to share with you a little video. And this is a video that my partner, James Painter, kindly made. And he made this for our, for our mastermind clients. So I probably, shouldn't really be sharing this with you, but I'm going to share it with you. It's a short little video, and I think it is fundamentally important on understanding why Germany, because when you're saying why Germany, you really need to start off with, why the euro? And so here's this brilliant video. As when it comes to currency, there's no one that speaks better about currency that I know of than James Painter.
All right, welcome to our long-term outlook for the US dollar and euro for Wealth University Mastermind for April 2024. So before we dive in, obviously just the normal disclaimers. For information purposes, we can't guarantee this, and trading and investment involves risk, we know. But okay, let's dive in. But before we do that, just to give you an overview of some of the science behind this. So just in nature, as you've got annual cycles, and seasonal cycles, monthly cycles surrounding the moon, daily cycles, night and day, and intraday, tides coming in and out. So in human sentiment, we have long-term, medium, near-term, and short-term cycles. So how those all work together is if you've got a market with a trend, and you've got a long-term cycle, and a medium-term cycle, and a short-term cycle. What happens if you take all of these and put them all together? So we add all these cycles up, and the net effect of that is this pattern here, which is how markets generally move. Now these can change because the cycles do flex and change in terms of amplitude as well as the actual cycle itself a bit, but effectively what you get is this pattern of a trend and a counter trend and then a trend continue. So if we're able to understand what these cycles are, it then gives us an idea of what this underlying market pattern is going to look like. So if we look at the dollar index going back into the 1980s, we can see here we've got a long-term cycle in terms of the monthlies. This is a monthly chart. And what that shows is a high back here in mid-1980s, another high 2002, and we've had a high here which has been kind of after this peak, and we're presently heading down into a trough here. So what it looks like is we've probably topped out here, and as you can see we've got a dominant cycle here, which is a shorter term, and then a longer term, both showing the market probably heading down into 2020, late 2025, 26, and a possible another trough about 2030. Then if we look at the euro, it's pretty much a flip side of that. Going back to the 1970s, we see a trough here, mid-1980s, 1997, 2001, and then we can see here this one is also kind of extended beyond the bottom. So our cycles, we are expecting that to head up into 2026 sort of area. But then if we actually look at the market patterns itself, a long-term monthly chart, you can see the market has gone up, come down, come up, come down, up, down. And how we are looking at that is that we've had this 1, 2, 3 pattern up and a correction down and a 1, 2. We're expecting a third push up here. So trend, counter trend, 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 counter trend, trend. And what that is telling us that as long as we keep above this 95 level, we could head a little bit down here, but we're expecting the market to push up and break above this 123.50 area and then head towards the 160.38. That is the next key level. Now, in terms of how the market moves, generally we tend to have some ratio between the various waves. So we've got two levels above here, which if we take this move up and we extend that, so the trend, counter trend, and then trend again from here, that gives us a next level of 185. But then if we look at the bigger picture, and we take this move up, ABC, and we extend that from this level ABC here, that gives us another target here of 215.46. So these are the levels to be watching: the 123.50, then 160, 185, and 250. So overall, that is where we're expecting the market to head. This was our analysis that we published this week, which effectively says we're correcting then further up. The market has retraced, and while there remains a chance of a deeper correction before the uptrend resumes, overall bias remains bullish with a break above 112.76, confirming a move towards 123.50. And a break above that to confirm a large degree uptrend is underway, signaling further upside towards 160.38. And then we've got two levels below that, 101.98, which would delay this outlook, and below 95.36 would invalidate. So that's what we've got for you today. Trust it gives you some insights as to where we're expecting the market to be heading over the next few years. If you want to get a 7-day trial, there's our link there, dynamicforexsolutions.com/go/free-trial. And if you want to get in touch with us, here are our contact details. Thank you very much.
Perfect. So I want to start off with why the euro compared to the dollar, and hopefully that explains it for you. So the next part is why the partner. And you go to Peter Katz. Peter Katz is the managing partner of Encore. He's a lawyer by background, and he's the managing partner of Encore. They've got 6 assets under management, circa of 90 million euros. But what's more important is that he actually was part of setting up Redefine in Europe, and pretty much was there for the last for 14 years, and running their whole European division in terms of that process. Before that, he was a senior manager at Deloitte, and he had a whole legal background. And so very much been involved in the property sector, the private equity and property sector, and the legal, background within the property sector. So a huge amount of experience, including sourcing assets and growing the asset base to over 600 million, sourcing bank debt with favorable partners, sourcing institutional JV partners, et cetera, et cetera, et cetera. So I don't think you're really going to get someone more experienced in Europe with experience of cross-border international investing, and specifically in the German market. And again, if you want to go and learn all about Peter Katz, you can literally go on the platform. You can go here, you can watch the presentation.
So we're not compromising.
And if you go to any part of this presentation, you can go hear all about him and learn about him and who he is and everything in between. Okay, so that pretty much is you've got a very, very solid partner there. The other thing that I really like about the partner is that they put their own money into the deal. So they put a minimum of 10% of all their own money into deals. So that's really, really important. That, our 3 rules of a partner is, have they invested their own money? Yes, they invest at least 10% of their own capital into the deal, which is alongside you. Secondly, have they got more than 10 years experience? Well, I've just explained to you, he's actually got more than 20 years experience in the European market. And thirdly, do they specialize in one sector? Yes, they specialize in Germany and in mixed use in Germany. So they tick all 3 of the boxes in terms of the partner due diligence and kind of where they're at. And that's, one of the reasons why they're actually, if you look at our platform, they're actually an established partner. Again, oh, no, sorry, that's the wrong one. I go to screens here. That's why if you look here, they're an established partner over there in terms of being an established partner. Okay. So Encore is their partner, and then the other partner is Callio Private Equity. So this is Callio's, the family office. They've got a private equity team. Again, if you've been on our previous presentations, and again, if you watch this webinar, you'll see Selwyn, who's part of the Callio private equity team. And you know what's really interesting with Selwyn, this is actually Selwyn here talking, and he basically has a PhD in mathematics from Cambridge University. His partner Glenn, they're a bunch of chartered accountants, CFAs, a private equity team that is specialized in doing property and property transactions and private equity and property with some of the biggest listed funds in Southern Africa and in Europe and in America. And yeah, I'm not really sure how you're going to do better with regards to the due diligence team. So that's your sponsor and that's your due diligence so that you can better understand them. Just by the way, if you want to go and read anything about all of this, you can literally go down to the bottom here. You can read all about Encore, and you can read all about, the Callio private equity team in terms of this process. So everything is basically here for you to be able to go and read. So let's go back to here. And the next thing is, as an investor, how does it actually work? Well, here's your investment account. You go on Lemonway, you set up your investor wallet. You then go on the platform, so the Migrate platform. You invest in a deal like the German deal. Then basically you've got aggregation of the funds. Then you've got a tax-efficient, investment vehicle. Then you've got the deal ownership. When the deal pays out its dividends and distributions, it pays into deal wallet. It then goes back into your investor wallet, and then goes into your investor account. So just keeping it nice and simple for you as to how it all works. Now, let's go back to this document here, because after we've been through the partner and how it works, I want to kind of go through this in this proposal basically. So firstly, Project ABBA is situated in North Rhine, I can't pronounce this, Westphalia region in Dortmund and Duisburg. Germany encompasses an investment opportunity comprising of 3 mixed-use properties, offering investors an expected, clear, and secure path with an estimated 5-year investment term with good cash-on-cash return and a projected IRR. Encore, the partner we've been through, financial strategy is designed to maximize returns and ensure prudent levels of risk management. It's really important that you understand this. When we interviewed and went through with Peter Katz and with Selwyn, risk and wealth protection is really, really important. And to put that in perspective, 2 things. One is they put their own money into the deals, and so they don't take risks. And an example of that in 2023, they did no deals. So they don't do deals for the sake of doing deals. They did no deals in 2023 because they didn't believe that any of the deals were good enough. Secondly, when they do their due diligence, even though they incur hundreds of thousands of dollars in doing the due diligence, they're happy to walk away from a deal if needs be to ensure that a deal is good quality. These are the 2 buildings that we're looking at in Duisburg and Dortmund. But before we go there, the question should be at a country level is why Germany? So again, you can read through these documentation. What I've done is I've literally been through the fact sheet, and I've just said some of the important things that I think are relevant. So the first one is that it's the largest economy in Europe, and it's the 4th largest economy in the world, according to GDP. It's got political stability. It's got low interest rates. It's got a competitive lending market. It's got 80 million people, and it's got strong purchasing power. One of the things that I really enjoy in terms of the strategy is that there's 7 major cities in Germany. So the ones that everyone kind of knows, Berlin and Munich, etc. But there's 40 secondary and tertiary locations. And what's fascinating is some of the biggest corporates that we understand, Volkswagen, Adidas, SAP, Bayer, TasteGroup, Basov, Liddy, OBI, etc. All of these massive companies are in these secondary cities. And so the way Peter explains this is that if you go to the major cities, you're going to be competing with the institutions. But if you go to the secondary cities, and there's 40 of them, there's substantial population, there's a lot of economic activity, and that's where they find real gems of opportunity that they can consolidate and ultimately sell on to family offices and to the institution. So again, when it comes to investing, it's always important to have good quality partners, to have the right information. And if you do the 2 of them, then you can be strategic and you can create value in terms of that process. In terms of a market overview, if you want to look here, you've got economic stability and growth. Germany has boasted a resilient and stable economy and is known for economic power of the European Union. I mean, it's literally the #1 economy in the European Union. With a robust and diversified economy, stable GDP growth, low unemployment, a well-established industrial base, and a resilient business environment, investing in German commercial properties provides a significant foundation for long-term returns. Then, this talks to the diversification and the whole thing that we've already discussed around the dollar, which I've shown you from James Painter. Number 3 is the thriving business hubs and global connectivity. So again, talks to the major hubs of Frankfurt, Munich, Berlin, etc. But then goes into the world-class infrastructure for commercial properties, the major transportation hubs, and how that attracts international business and international investment. Then number 4 is you've got favorable lease terms and regulation. And number 5 is you've got investor-friendly financing conditions. Some of the investment highlights that I think are important. The first is you've got mixed-use tenancy. So we're going to go into this a bit more detail, but you've got resilience in terms of multiple tenants, multiple income streams that dramatically reduces risk. The tenant portfolio is predominantly comprised of offices of commercial and medical nature, as well as retail. So again, that's the whole beauty of mixed use, is that you've got different asset classes in different sectors. Historically low vacancy rates, so somewhere between 3 to 4%. Very loyal tenants with robust lending history. So again, you've got long track records of tenancy. Strong and established anchor tenants. So in Santander Bank, one of the biggest banks in the world. Occupancy rates of 94% with historically low vacancies. All the rents are below market value, approximately 20%. So that's significant because you want to buy where the rents are lower and you can increase the value of the rents because then you can increase the value of the property. Encore's tax-efficient holding structure and funding structure. So again, this is about having efficient tax structures. Existing relationship with the seller. So this is an off-market deal. You can't go and buy this through a broker or an estate agent. Peter and his team at Encore had an established relationship with the family office. They've got assets across Switzerland and Germany, and they're wanting to get rid of their assets in Germany and just focus on Switzerland. So this is an off-market opportunity where they're buying from a friendly seller, and that's how they've been able to put this entire deal together. This is the beauty of going through a family office. If it wasn't for the family office relationship, none of us would even know and have the possibility to invest in this deal. Strong ESG. So if you want to know what that is, it's all about environmental, social, and governance. So it's all about being green and complying with nature and regulation and all the new age terminology, which is really important from an ESG perspective. The floor structure and premises designed against startup tenants. So again, you've got nice barriers to entry, which is great. CPI-based rental increases, so it increases, with inflation, and significant capital growth potential given the purchase price at the current market cycle and the sale during superior market conditions. Managed to ESG compliance, increased rental potential linked to CPI escalations and ERVs at a strategic tenant turnover. So all of these things are pointing to buying at a good price and being able to create value and then being able to sell, which will ultimately give better returns. The next thing is the rental analysis. So again, you can go and read all about this between the different property, different properties, but you've got mixed use. So you've got risk mitigation, you've got flexibility because you're getting rents from different mixed use tenants. You've got a highly regarded asset classes from a modern urban planning perspective. You've got an embodies a fit for use format for structural urban changes, and you've got stable through the cycle of yields. And so this is really important because, again, Peter has extensive experience in Germany, and there's a number of sectors that he likes to focus on, specifically mixed use with a combination of office, a combination of medical, and retail. But when it's retail, it's the convenience stores retail, so the things that people really need. So they've gone for a very resilient structure with predictable income, which moves away from things that were badly affected, during the COVID times. You can see the breakdown here of the split between the three buildings. So this is a good in terms of a balance of a split. And then also the split between the different assets. So you've got retail, you've got office, you've got medical, and you've got other. So again, a nice balance between the different components. You've got the income expiry. So you can see here that, there are tenants and contracts that are coming up for renewal. And this is going to be one of the tasks for the partners on the ground to be renewing these. And the more they renew them and the more they increase the value of the rental income, the more they can increase the value of the building in terms of that process. Now, I just want to go through my notes because I don't want to read everything that's here. A couple of things that are important. So in terms of the region, the North Rhine-Westphalia, I'm not sure how to pronounce that. All three properties are located in this area. It's the highest population in Germany, 18 million inhabitants. The GDP is 705 billion, more than 20% of Germany's total GDP, and it's got 70 universities. From no other location in Europe can so many people with such high purchasing power be reached within such a short distance in terms of this area. And you can see all three of them and where they actually are. Now, I'm not going to go into all of the details around each of the cities, but some of the stuff that I found interesting was Dortmund is the third largest city in that North Rhine-Westphalia and the 9th largest city in Germany. It's one of Europe's leading IT centers, 680 IT and software companies employing 12,000 people. And other main logistic industries include healthcare, insurance, logistics, energy, etc. And you can see the GDP there. Also, there's been a 33% year-on-year take-up. So the office market is growing dramatically from 2023, versus 2022 versus 2021. So again, that's important to see if you're worried about what's happened with COVID with office. And then vacancy rates are currently sitting around 4.5%. So just some key numbers. This talks to one of the key tenants. Interesting enough, established in 1895, 200 educational centers, a staff of 1,500 people and 15,000 students. But yeah, it's basically in the education sector. Then in Duisburg, it's the 5th largest city in that North Rhine area and the 15th largest city in Germany. It's an inner harbor, is Europe's largest inland port with 15 kilometers of transshipment waterside and 1.5 square kilometers of storage area and connection to overseas parts of Rotterdam and Antwerp. It's the largest steel industry in Germany, with ThyssenKrupp headquarters, and the other industries, and I can't pronounce this, metallurgical, engineering, chemicals, cable, and mill plants. And again, you can see the GDP there. Okay, then you can see here that one of the key tenants is Santander Bank, and that lease only expires in December 2028. So that's quite a cool thing. And they're one of the largest retail and commercial banks in the world. So this is obviously a very core tenant in terms of that process. And again, you can see the breakdown of the buildings here and where they actually are. Then in terms of location, again, you can see where the property is, and you can see where the train station is, and you can see where the property is, and you can see where the main retail arcade is. So very prominent right in the city centers, key things in terms of location, which is important. And then for those people that are into ESG and want to understand ESG, all buildings meet ESG analysis, which is very important because from an investment perspective, they also are getting, what are the words called, where they get, it's not endorsements, it's something else. Anyway, according to European standards, they actually get incentives to continue with the ESG in terms of the overall process. The next thing is you can go, just by the way, they've got the whole decarbonization footprint and everything else. Then you can go to the projected returns and you can see the full breakdown of the model. What is important here, you can see the cash on cash annual. So it's ranging kind of, it's higher and then it kind of goes down slightly due to the financing. But the average cash on cash is 7.29% over the 5 years. And that's really attractive when one takes into account Europe and the euro. I've been looking at buildings and been trying to invest in Europe for, close on 20 years, certainly quite aggressively in the last 10 years. And we're looking at 4 to 6%. So I really like this, and you can see the return on investment there, and what is the expectation in terms of the return on investment. If you want to go into the key metrics, you can see this in equity investment. You can see who's the issuer. It's a 5-year investment. Cash on cash is 7%. Return on equity is 9.1. The IRR is sitting around kind of 13.8% base case, but the target is 16.5%. You can see the equity multiples there. You can see the costs and how it breaks down. So literally everything's here from a completely transparent perspective. You can see you're buying it at a 9.55% cap rate. And that also shows where the market is at the moment. Because interest rates have gone up so much, cap rates have gone up. And if you know how commercial property works, as cap rates compress, that's how we're going to create value along with increasing the rental income in terms of the entire process. So you can see the bank loan, 60% loan to value, interest, it's a 5-year term. So it's all basically, everything's here in terms of the breakdown. And then finally, as I already discussed, you can go into who Encore is, the partner, because it's really, really important. And then secondly, you can go into Callio Private Equity from a due diligence perspective in terms of where you're at. So I think that's really key. The other two things I wanted to show you just quickly was, this is a prospectus put together by Encore. They can show you all of their deals and how their deals have actually outperformed. So this is their equity invested and the equity return. So all of the deals they've done to date have performed, and they've also done better, what they bought them for and what they sold them for. So if people are interested, I'm happy to share this prospectus, but this is kind of their thesis on their investments in Germany. Again, talking to the German market, we've been through this. The fundamentals that they focus on, so they focus on an asset class, they focus on defensive properties, secondary use and flexible. They focus on location. I told you already about the 40 cities and specifically what they look for. Positive demographics, catchment area, purchasing power, competition and infrastructure. Then they want to unlock value by active asset management. So that's about the quality of your partners on the ground. They want to minimize competition. So one of the reasons they don't want to go into the big 7 cities, so they don't want to be fighting with the institutions, and they specifically want off-market deals. And then finally, visibility. They really want to have a deep knowledge of location, the tenants, and the industry sectors. So these are their 5 fundamental pillars that they use in their investment thesis. Again, back to the city centers and the 40 cities, I've spoken to that. There's a number of case studies. They bought this building. You can see here they bought it in 2018. And the entire investment philosophy is here. I'm not going to go through it in terms of the breakdown and all the details. But I think what is important is you can see here, they've outperformed based on their expectation and what they actually did and their IRR, etc. Then you got case study 2. This was a medical building that they bought. And again, you can see here it was bought in 2019. And again, you can see the breakdown of what they achieved in terms of their expectation plus their returns. That was a 15% IRR, again, outperforming their expectations. Then OBI, this was a building I actually tried to invest in the middle of COVID. There was an opportunity to get in with 750,000 euro investment. We had 2 weeks and we couldn't partake, and I was really upset to miss it. So this is like a builder's warehouse or a home depot. And it was bought in March 2020, so literally right as COVID was happening. It was a 5-year investment, but they actually got in and got out really quickly on this deal. You can see the IRR they got on this was 22.5%, and they were in the entire deal for 24 months. So they really outperformed for investors in terms of their returns. You can see basically their business plan. So it's about creating value, targeting major property sectors, managing benefit from macro themes, targeting healthy risk-adjusted returns, managing risk and defensive assets, and ultimately the returns that they are facing. So again, happy to share this document. In terms of their investment strategy, they're looking for things in distress. They're looking for things that are underfunded and undermanaged, and they're looking for supply and demand imbalances. And then their strategies for current market conditions, which asset classes are they focusing on? So you can see here the ones that they're focusing on, the locations that they're focusing on. I've been through that in detail. And then the deal sizes that they're focusing on. So 10 to 50 million euros. And then add value to undermanaged and underfunded assets. And then finally, the team who I've already been through, both the executive and the non-executive team. So yeah, that's their prospectus. And then finally, the portfolio of 3 properties. All of this information is here. We've actually put this into our deal fact sheet already. So you can basically see from their perspectives, and we just made it easy for people putting it into one fact sheet in terms of the overall process. So I think you basically got a good idea of everything. that is happening and how it's all working. If you go back here, you can see that it's a targeted IRR of 16% with a cash on cash of 6.99. Remember that all our returns are net. So, we charge a 3% upfront structuring fee and then a 10% success fee. So we only make money after the investors make money. And what's important here is that that's all factored in already. You can see it's a core plus deal. If you want to invest, $100,000, you can literally go into the calculator. You can see the fees, you can see the returns, and the green is money in your pocket. The red is the fees. And if you put in $100,000, you're looking to get $200,000 out with a 6.99% cash on cash and a 16% IRR. You can go read all about the deal. You can read about the sponsor, the due diligence, and even the deal structure. And everything is literally here. And finally, if you want to invest in the deal, you can literally go along and you can go here. You can go agreements. So you can digitally sign the agreements. You can go, I agree, and you go make investment. And what I think is just incredibly remarkable nowadays is that I can go in and invest in Germany, and you've literally just watched me invest in Germany in under 30 seconds. I see, I actually made a mistake. I've doubled up here. I go cancel my investment, remove my investment, cancel, and the money is refunded back into my wallet. And you can see that I'm now invested in an industrial building in Phoenix and a German building in Germany. I'm not sure if anyone has any questions. I'm not going to go through the entire platform and how it works because we've got separate things for that. But you've got your wallet to be able to run all your money. You can withdraw and deposit your money. You can have different profiles so that you can invest in your own name and offshore structures. You've got your marketplace where you can go and look at all the different deals and you can manage your entire portfolio online. And so that is all from me. I hope that helped you. Are there any questions that I have or that you have? Sorry. And I think what's quite important here is you can see I've done it very, very consciously. I've done it quite quickly. I've gone from, why the country? I've gone, why the currency, the euro? So why Germany? Why the currency? I've then gone, why the partner? And we've spoken about Encore and the partner. I've then gone, why, the asset class in terms of mixed use? And then finally, we got down to the actual property, the actual deal, and the opportunity that's on the ground. And so, is there a minimum investment? Yes, it's $10. So everyone has the ability to participate. And what is the time frame? It's due to close at the first week of July. So we've got about 2 to 3 weeks until the deal closes. Peter is trying to finalize the entire deal. So it's not quite in Germany. It's not quite the same as America. So in America, they have a closing date and they're very fastidious in terms of hitting that date and quite litigious, by the way, which means that people sue people if it doesn't happen on date. In Europe, it seems to be a little bit more like Australia, England, and South Africa, when it tends to be more flexible based on the banks and the buyers and the sellers, etc. So they are just trying to finalize up some of the paperwork, including the mortgage broking and all of that stuff. That's all happening in parallel. And the intended date for them signing all the documentation is in July, which means the money will have to move. All the money will need to be in place so that they can go ahead for transfer. I'll be honest with you, it's the first income producing deal I've done in Germany. Again, I don't invest based on my experience. I'm based on our partner Encore and the fact that they've been doing this for 20 years. But it does feel a lot more like England, Australia, and England, Australia, and South Africa, where the deals tend to kind of can take 2 to 3 months to close a deal, whereas in Australia, I'm getting all my countries wrong. Whereas in America, when they agree a date, it happens quickly. But the whole thing here is that where the markets are at the moment represents a significant opportunity. We've got a partner on the ground with an off-plan opportunity, off market, no one knows about it. And we get to participate alongside them. And, generally, we would never, ever have a seat at the table when it comes to these type of deals because only family offices and institutions get to participate. But through our relationship with Callio and Callio Private Equity, we and the investors have access to it. If you're wanting and you're high net worth and you want to invest with Private Wealth Global, there's a 50% reduction on fees. and the minimum investment there is $50,000 in terms of that process. Cesar said, what is the expected ROI? So you can see here in terms of the returns. So if I share my screen here, you've got a just short of a 7% cash on cash return, 6.99%. So that's income in your pocket that's getting paid net every single year. So again, if you invest $1,000, that means you're getting paid $70 a year in net income. And then the IRR, internal rate of return, is 16%. To answer your question for the person that asked about ROI, again, if you invest, let's just use the $100. Again, you can literally go and use the calculator here. But if you invest $100, you're expecting to get back $200. So over a 5-year period, your ROI is roughly 20% a year. Some would say also your equity multiple is a 2x because you put in $100 and you get back $200 in 5 years. Can we have access to the recording? Jody, yes. So the recording will be put into the platform here. So you'll have the recording of tonight, plus you'll have the recording with Peter Katz here in this. And again, there's no point in regurgitating information with Peter. If you want to go learn all about the partner, we did an exclusive interview with him with our mastermind clients, and we decided to share that with everyone so that they too could also understand why Germany, why the asset class, who Encore are. So all the specific information is there. Tonight, I wanted to give you quick, concise information and to show you where to get the rest of the information should you want it. Cool. Are there any other questions or anything else that I have forgotten that I can help you with? Please let me know. So it's really interesting. I spoke a little bit about that story of that OBI opportunity. So like I said to you, I've been trying to get into Germany since probably about 2007, 2008. I started investing in England in 2002. And there were a number of reasons why I've invested over the last 20 years in America, in England, in Australia, and in South Africa. And the first one is that they all spoke English. So it was a hell of a lot easier. The legal system, I could understand. It was all fairly similar. Whereas once you go into Germany, they speak different languages all over Europe. There's different regulation, different compliance, etc. So it makes it a hell of a lot more difficult. And I told you already in 2022, the Calio private equity team had this opportunity with 750,000 euros. We had to act quickly. I went to all our top clients. I was like, come on, let's participate in this. This is going to be amazing. We just couldn't act quick enough. And so we lost out on that opportunity. And like I showed you already, they turned their capital in under 2 years, and they got an IRR, internal rate of return, of 22%, which is unheard of in commercial property, particularly existing commercial property. And it really made me upset. And I'm super excited that nearly 3 years later, we've now got an opportunity to invest with the same partner on the ground, income producing assets in Germany. It's the first one we've ever had in, certainly in my 28 years of investing. It's the first one we've ever had on Wealth Migrate or Private Wealth Global in terms of income producing assets in Germany. And by the way, it's the first income producing asset we've had in Europe. And so this is a significant opportunity for people like me that have been heavily investing in England and in America over the last 10 or 20 years. Often we're quite exposed in those countries and those currencies and in those asset classes. And we now get an opportunity to invest in the powerhouse of Europe, in one of the strategic cities with a great partner in a strategic asset, and to earn an income producing, return, which I find very, very exciting. Perfect. Yeah. So thank you, Nick, for answering the question. Okay. Are there any other questions that I can help with? Anything else? I'm here. I'm happy to help. I've been doing this for 28 years. So my job is to take all the information and to synthesize it and to make it easy for you and to show you where to find it. Is there anything else that I can help with? Okay, well, if there's nothing else, then I tell you what I'll do is I'm going to share my screen again. I've shown you already where to get everything on the platform, so you can literally go and download everything. This fact sheet is here. You can also even download everything that's on this sheet to make it easy for you. So yeah, I would highly recommend, go play with a calculator, and all the information is at your fingertips. Our value is trust, transparency, and alignment. We believe that we build trust by bringing quality partners. We like to, provide transparency by giving you access to all the information, and we like to provide alignment by making sure that our fee model is aligned with you and that our partners make a return which is aligned with you, not only by putting their own money in the deal. You can see I put my own money in the deal as well, so that I'm invested alongside you and aligned with you. But ultimately, the fee structure is determined that we and they only make money after you, the investor, has made money. And so, in conclusion, this is the way it works with regards to our digital marketplace. I want to say a huge thank you. You can literally go along to the website, wealthmigrate.com, and you've got my details there if you want to send me a WhatsApp. Perfect. I'll see if there's any more questions. Thanks for the kind words. I appreciate them. And yeah, going once, going twice. Anything else I can help with? I specifically want to keep these short on purpose. Time is valuable for everyone. And this is, it's an opportunity to just talk about the deal and to get clear. Okay. Have a wonderful evening, everyone. Good luck investing. As I say, 2 to 3 weeks. They didn't even bring a deal in 2023. So I don't know when the next deal will be coming in Germany. I don't know when the next deal will be coming from this partner. And I certainly don't know when the next deal will be coming in Europe. So if you're wanting to take advantage of James Painter and what he's saying around the euro, and by the way, if you listen to Garth Wellman less than a month ago, the CEO and co-founder of Calio Capital, a family office that manages 65 of the wealthiest families in the world, he literally was saying exactly the same thing. They're focusing on income-producing assets out of Europe at the moment because of the expected increase in the euro against the dollar. So I really believe, and I'm not giving you financial advice, I'm just telling you what my intuition's telling me and what I'm listening to people that are far more intelligent than me saying, that the euro is something that we should be looking at. Jeremy's saying, thanks for the presentation and for the opportunity. Who are the vendors and why are they disposing of the assets? Jeremy, I did answer that, but just to repeat, they're a family office based out of Switzerland. So they manage the money for a very wealthy Swiss family. And they've got multiple assets across Switzerland and across Germany. They are consolidating and selling off their assets in Germany and just focusing on Switzerland. And so through Encore and Peter Katz's relationships, he knows this family office. He's actually transacted with them before. He's both bought and sold to them. And so he's actually buying up their assets in Germany as they're disposing of them. I hope that helps. Any other questions that I can help with? No? Jeremy, you happy? Okay. Everyone, have a wonderful evening and good luck. I fundamentally believe that Ray Dalio has taught us how to do it. The man has achieved a 21% return year on year for 40 years. And he says the number one thing when it comes to investing is diversification across countries, currencies, assets, partners, and time. Tonight is another opportunity for you to be able to diversify into Germany, into the euro, with a quality partner, a quality asset, and to earn an income. Have a good one. Cheers.